morning. How are you?
Good.
Where are you at? Are you eating dinner? You like at a restaurant eating some dinner?
Yeah. Can you tell by the music in the background?
Eating some dinner. Are you at least having a beer or something?
No, having some horchata.
Okay, good. Okay, good. Well, thank you for inviting me to your dinner party.
Absolutely. Hey, it's always welcome.
Okay, good. Awesome. Well, nice to meet you. Did you want to say something, introduce yourself real fast to everybody, or say something?
Yeah, no, I mean, you had, I think right when I popped on, you'd asked a question about, what makes us interested in self-storage. So for me, it's more of the passive income later, trying to get those in the traditional areas like we had talked about before. But I'm up in the Charlotte market. And so we're still going around, I still, with Jamie and everybody. So we're still driving around looking for some units.
Okay, cool. Good. Well, I like it. Well, thank you for coming and hanging out with me today. I appreciate it.
Indeed. I'm glad you started doing one of these.
Yes, I know. I'm looking forward to this. It's going to be fun. So, okay, good. All right. Well, anybody else want to say hi and tell me where they're from before we get started? No, everybody's too shy. Okay, all right. Well, let's get started. I wanted to just go over the fund, and also I wanted to tonight we're going to go over the fund and talk about what it entails, and then on top of that, we're also going to talk about. Well, I'm going to introduce my team as well too, and who's here to help manage the fund and manage all the facilities that are going to be in the fund. And then we'll just go over a little bit of the presentation that I have and just go over the offering. So you guys have an idea of kind of how the offering works. And at the end, we'll answer questions and we'll go over any questions that anybody has. So again, thank you for coming to hang out. I'm Stacy Rossetti for people that don't know who I am. I'm Stacy Rossetti, and my husband Pete is also on here. And excuse my voice, I've been sick for the past week, so I'm starting to get better. But I had a head cold for the last couple of days. But anyway, so my husband Pete and I are investors in self-storage. We've been investing in self-storage for 5 years. Okay, we've actually been investing in real estate for 10 years, but we started focusing on self-storage once I got pregnant. We started looking for, as Ernie says, we started looking for passive income, and once we started getting out there and really looking, we found that we found a storage facility that was actually a great buy, one of our best buys that we've had so far, which is our first facility, and and it's just been a great investment ever since. And once we bought that facility, essentially we learned, how well you can do in self-storage. Then we just started really focusing on self-storage. So essentially, and you guys can check us out too. And I did pull the website up so you guys can see us, but it's here. It's Miss Lillian's Self-Storage is the name of our facilities. It's under misslillians.com. Okay. And but when we buy the facilities, we won't have them under Miss Lillian's. We'll have them, in the fund. But I just wanted to let you know that you could check us out. We own 11 storage facilities. We bought one our first year. We bought one our second year, and then we bought like 3 the next year. All right, so we had like 5. We had 5 within the first couple of years. And then in the 4th year, I had 3 under contract, and they all fell through. So we didn't buy anything in the 4th year. During the 4th year, I hired Chris, our acquisitions person, who we'll introduce in just a second. And then he started getting out there and really looking for facilities for us. And we bought last year 6, right? And so that gives us a total of 11 storage facilities, and we're growing and just doing great right now. And I decided to start the fund about a year ago last year, and it took a good year for us to get this thing going. And essentially the reason I decided to start this fund is because, if you guys know me and follow me, then you all know that I typically, up until now, I've typically bought facilities that are $1 million or less. in like tertiary markets, right? Typically in tertiary, some in secondary, but some in tertiary. And a tertiary market is really like country or like kind of smaller cities, smaller towns. And these types of facilities, you can buy these facilities for, typically for less than $1 million. And then I'm 100% privately funded. So I just, whenever somebody came to me and said, hey, I have this much money, can you do something with it? I would just go out and I would buy a facility with it. And typically people have anywhere, have a couple $100,000. So we would stay in the range that whatever they could they could loan on, right? But what happened is over the course of the last couple of years, as we started getting out and really looking for storage facilities, and what Chris does really well is finds these types of storage facilities that are in what I call the sweet spot, right? So you have like less than $1 million, which everybody wants to buy these, and these are easy, these are easy to find and fundable, easy to fund. And then you have kind of like the facilities that are like, the ones where people say like, 30,000, 40, 50, 60,000 square feet, so they're, $2, $3, $4, $5 million, right? They're the bigger facilities. And so so those are also like, those are the ones that are mostly syndicated, and those are out, where people are buying the bigger facilities. But there's this kind of like sweet spot in the middle, and it's like around $1 million to $2 million, but it could be anywhere from like, let's say 700,000 or 800,000 to like $3 million, but typically in this like sweet spot. And we come across properties like this all the time that are mismanaged facilities, and we buy mismanaged facilities where you can't get a P&L on the balance sheet. You can't get a tax return or a rent roll because the owners just don't want to give it to you. We had a facility under contract for $1 million, and the owner, he said he was making $150,000 a year, and but he had no tax return to show for it, and no like P&L and balance sheet. He didn't even know what a balance sheet was. In fact, he only took cash. And then we also find facilities that are like, we have one that we're hopefully getting under contract in the North Georgia mountains, where it's about 200 units, but it's only 25% full. And he wants to sell this property, and it's a great deal to be able to like just come in, add value, and lease that up. But he wants to sell it for $1 million. It's worth, once it's full, it's worth probably about $2.5 million. So it's a great deal, but he only wants to sell it for $1 million, which I would be willing to pay. I'm willing to pay that because I know that's, I'll double the value, if not more, of that property. And so these are the types of facilities that we come across all the time. But the issue is that like, you can't go to a bank and get a loan for these things, right? So you have to get out and either syndicate it, or you have to like start a fund, just like the fund that we started. So this the Self-Storage Fund of America is exactly that. It's there to buy these properties that we come across on a regular basis, and that we don't have to pass up because we don't have the funds for those. And so that is what this is for. So we are going to be focusing on buying mismanaged facilities where we can 1.5x to 2.5x the value of that property, right? That's what we're looking for. And so, we'll get into the offering after we introduce the team, but I just wanted to give you an overview of essentially who we are, and kind of how we run our business, and what we look at, what we look for. And we do have some income producing properties. Out of the 11, we do have a couple of income producing properties. They're all pretty much income producing properties now, right? But it takes a good year for them to get leased, to get up running, leased up, and turning a profit, so it does take a year. So that's why even in the fund, like, we're asking for a year minimum, if not longer, just for us to even stabilize some of these properties, right? So that's what we're looking for. And we've just like, after having 11 of these types of properties, 10 of these properties where we're just like, we know how to come in, clean them up, stabilize them, and get them to be able to turn a profit. And that's just kind of what we've gotten used to, is these types of deals. And a lot of people actually pass up these deals because they are a lot of work on the front end. It's really a lot of work. So a lot of people do pass them up, but this is kind of what we got good at. So I feel like we have this niche. There's a niche in the storage investing world, which is like mismanaged facilities that need just a little bit of TLC. And, and they're in this kind of spot where, like, a lot of people can't fund these types of deals. And so I feel like we have the opportunity to be able to put this fund together, raise the money, and go out and buy properties like this. And then, it's a win-win situation for all of us. We'll all be able to make, some money doing that. Okay. So that's us in a nutshell. Now, the way that we run our properties, I always say, is we find them, we fund them, and we run them. Okay, so first of all, we find them, and we have our acquisitions person, Chris, who finds them, and he's going to introduce himself in just a second. And then I'm the money person, so I'm here, and I'm the one that's always pitching and talking to investors and trying to get investors to come on board with us. And then my husband runs them. That's his job, is he manages the management part of all of our storage facilities. And essentially in the fund, it's going to be the exact same thing, right? So we'll be working for the Self-Storage Fund of America to find properties for them. And we have a management company set up that will be able to manage them. Okay. So I wanted to just introduce our team, and just first of all, introduce Rob, who is our CFO, and I was thinking about essentially when I started getting close to coming to fruition on the fund is getting close. We're almost ready to launch this fund. Then I said, I really need to hire like a CFO to come in and really help me manage this fund and help me to figure out if, the deals that we bring to the table are good deals for the investors inside the fund, and really to look at the whole picture and to strategize, everything about what we do. So that's why I hired Rob. So I wanted to have Rob introduce himself, and kind of, Rob, if you could introduce yourself, you could turn your video on if you can, so everybody could see you. And then also let everybody know what you're going to be doing with the fund, what we've done up to date, and like what you're going to be doing with the fund going forward.
Sure, I can do that. So I am Rob Thomas, as Stacy said, and she brought me on a couple of months ago as to help her in a CFO kind of a role. I come from a CFO background, been doing it for 20, 25 years. The last few on a fractional basis for a bunch of different companies. But very excited to be part of this fund with Stacy and with Pete. My role right now is, as Stacy said, we have a model that's been built that we run potential properties through just to see what kind of returns we could expect. And, again, whether it's a good investment or not for the fund or Stacy and Pete. And so with that also, helping to make sure the books are all in order, especially with this fund, because there's, we manage the accounting a little bit differently. With so many investors and with all of the rates of return and IRRs and things. So just making sure we keep all that straight, and, making sure the books are all up to speed and closing on time, and investment reports being generated and delivered to all the investors in a timely manner. So with the fund so far, really just been helping Stacy get all of the paperwork finalized and pushed through and published and out on the website. So, I think we're good to go. I think we're really excited about the opportunity, and I know I'm excited about the opportunity to work with Pete and Chris and Stacy, and to add whatever I can, but to learn a great deal as well, I'm sure. So thank you.
All right. Thank you so much, Rob. Awesome. Okay, good. Okay, so Rob's going to be on in the back end, helping us to manage this thing and really to strategize on it. And I'm looking forward to working with him. We've gotten a lot done, honestly, in the past couple of months that we've been working together. So I think it's going to be really good. And awesome. Okay, so now let's have Chris introduce himself. I hired Chris about 1.5 years ago, and he is our acquisitions person. You want to hop on and introduce yourself and kind of tell everybody how we're finding all these properties?
Yeah, sure. So I'm Chris Davis, and I have a background, a sports and fitness background as a coach. And Stacy brought me on last year as her acquisitions manager. So what I've been doing is working to develop the acquisitions team and just trying to keep the deal flow high, working on the deal analysis and assisting Stacy and Pete with the deal execution. And that's pretty much it.
Okay, good, awesome. Well, he does a great job. Like I said, we did hire, and we did buy 6 facilities last year. So he's out looking for properties for us, and we'll, and I'm looking forward to what he brings to the table for us for the fund as well. Okay, good. Well, I appreciate it, Chris.
Thanks.
Yes, and he has underneath him, he has a team of a couple of virtual assistants, and their job is to talk to owners and see talk to owners and see who's ready to sell. All right, so he has a team underneath him as well too. And he's doing really well, so we're very proud of him. Okay, good, awesome. So now that's find them. I'm the fund them part, and then also Rob will be part of the funding part, and then Pete is the management parts. So Pete, why don't you introduce yourself and let everybody know kind of what you do for the team?
Hey, my name is Pete Rossetti. So yeah, I'm the running it part. So basically, as soon as Chris gets it under contract, I kind of start everything on the back end. So, before we even close on it, we've got to get all the branding together, order some signs, just so when we do finally close, we can hit the ground running. And then I've got the team under me as well, on phones and in maintenance that I manage. So once we take over, we don't miss a step. We just try to fill it up as quick as we can and go from there. And that's all I got.
Okay, you broke up a little bit. So just so you know.
Uh-oh. Yeah, we're struggling with audio here so we don't echo.
Okay, good, awesome. Okay, all right. So Pete is as soon as we buy the facility, I'm sorry, as soon as we put the facility under contract, right? So Chris works closely with Pete, and he'll do what we call the onboarding process, which is getting the storage facility ready so that when we close on it, like we're ready to rock and roll, right? Because otherwise, if we don't, then the first couple months are a little chaotic. So he does the onboarding process and gets that all up and running. And then also on top of that, as soon as we close on the process and he takes over, and underneath him, he has his whole team as well too. So he's got like an operations manager, he's got phone support, he's got, hang on, let me get these people here real fast. Yeah, he's got phone support. He's got the boots on the ground people that handle all of the facilities for us. And so we will run the Self-Storage Fund of America typically the same way that we run miscellaneous and self-storage. We'll have, and it really depends on where we buy the facilities. But essentially the management part or the management company will be managing also the Self-Storage Fund of America. Okay, good, awesome. And if you have any questions or anything like that, don't be afraid to unmute yourself. I set this up as a meeting, honestly, just so that you guys could ask questions if you're wondering how we're doing anything, or if we buy a facility, how we're going to do everything. But I set it up as a meeting so we could do it this way, right? I thought it would be a little bit easier. Okay, good. And then also real fast, I wanted to get into the fund and go through the presentation a little bit. I think you should be able to see here the offering characteristics page. So let me know if you cannot, just unmute yourself so if you can't see it. But so what we're going to be doing is we're going to be looking for storage facilities in most likely Georgia and Florida. But we are also open to this anywhere in the Southeast and in Texas. We're typically in Texas and Georgia and Florida, like a lot, because this is where my family is and this is where we live. So we're kind of driving, back and forth. So we're open also. We're here in Texas right now looking for storage facilities. So we may find something, we have put in a couple offers over the last couple of weeks, and we'll come back and see what they say on those as well. So Chris is out looking for facilities, Texas, and all the way through, I would say along the 10 or the 20 going towards Georgia and Florida as well. So that's kind of our area. And then also we're going to, so what we're trying to do is we're trying to raise, the capital raise is $7.875 million, right? With the option to expand to $10 million if we want. And the targeted IRR is 19%. And the hold period is 5 years with a 2-year extension. So what that means is that, basically what we're doing right now is we're calling for commitments, and our minimum raise is $25,000. Right. So we're I'm looking for 40 commitments of 25,000. Now, if you want to put more in, that would be awesome. That would be great. But if I could do 40 commitments of $25,000, then that will definitely give us enough money to buy our first property, right, and to close on our first property. And then the way that it works, so when we say hold period, essentially the money would be put into the fund for the 5-year period. All right. Now you would be paid your dividend throughout the time that you have the money in. Right. But essentially the hold period is 5 years, because we did have a couple of people email me and ask about that. So I just wanted to make sure that everybody knew that it is a hold period of 5 years. But we would pay as soon as the property makes money, you will start getting your dividend. And Rob, did you want to say something about that? I just want to make sure about the hold period and paying the dividend.
No, I don't think so. I think the only thing just to make clear on, though, is the way that we are setting this up is, as Stacy mentioned, we're looking for commitments right now. On the day that we have the amount we need to close the fund, which is the 500,000, we close that fund on that day. We will reach out to everybody who's made a commitment, basically a capital call. I know that's the wrong terminology, but we will exercise everybody's intent to invest. And then so it really eases a lot of the record keeping, the accounting of having everybody start their hold period on the same day. So everybody's, return percentages and IRRs are all consistent one with another.
Yeah. Exactly. Yeah. So we'll let, if you guys decide after you listen to this, and this presentation that I'm going through is in the portal, and I'll show you the portal in just a minute after we go through the presentation. This presentation is in the portal under other documents, but so that you can go through and you can look at it. And we will be putting in the operating agreement. Now the PPM is in the portal and the operating agreement is in the PPM, but I'm going to put it in as a separate agreement. A separate document, excuse me. And then also on top of that, I'm going to add in like an FAQ section, because all the questions that are coming in are so good. They're such great questions. So I want to make like a little FAQ, because I figure like if one person's asking that question, everybody's asking it, and then we could have all the answers there as well too. So, but so we're working on that as well. But anyways, yeah, so the targeted IRR is 19%. And so the way the distributions work is essentially there's a preferred return, there's a preferred rate of return of 10%. All right. And we personally, so Pete and myself, we do not get paid until we hit our first hurdle. And our first hurdle is actually 15%, right? Actually, I'm sorry. So once we hit 10%, then we reach the first hurdle of 15%. And in that hurdle, it's an 80-20 split. Right. So Pete and I, so the management company, the managers get 20%. And then the investors will have 80%. Okay. Once we hit that 15%, then we get put into the second hurdle. And the second hurdle is a 75-25 split, right? So we get 20 asset managers get 25%. And the investors get 75%. So essentially all that means, just for everybody that's listening, is that there's an incentive for myself and Pete to make sure that we get the highest IRR that we possibly can. All right. And the higher the IRR, the more of a promote that we get, the more of a split that we get. Okay. And the distributions will be given on a quarterly basis after we stabilize the property, right? So let's just say I do buy that property in North Georgia that is that's 25% full, right? It may take us, some time to make money on that property because it's a mismanaged property, like I said, and it's going to take us some time to lease that thing up, right? So essentially you'll start getting a distribution once we start making money on the property. And that is what our bookkeeper, Chris, we have another bookkeeper, his name is Chris, and then Rob will be working together on is to manage all those distributions. Okay. All right. And if you have any questions, just unmute yourself and ask, or put them into the chat, and I'll ask those. Okay. Sorry, I'll answer those. And okay, good. Yes. And then also, so we will be contributing 4%, right, of the total capital commitment. So at the close at 500,000, right, then then my husband and I will put 4% into it as well too. And so every time that we close, we'll put 4% in. Okay. And again, like I said, it's a promote of 20% to us after we've reached the 10% preferred return and up to 15%. And then once we get to level 2, and once we reach the hurdle of over 15%, then we get a 25% promote. And a promote is another word for split, because somebody had asked, like, what does promote mean? Promote is another word for split, basically. It's the split between you and us. And like I said, it's a minimum of $25,000. So we're looking for a commitment of 40 people to do $25,000. And that will give us enough money to close on our first $1 million property. And you must be an accredited investor. And I don't want you, when people say, oh my gosh, you have to be accredited. All right. So, but that's not like that's not a big deal. So when you get into the portal, and I'll show you how, and actually I'll just pull this up right now. Let's see. And when you get into the portal, so this is the website. It's the self-storagefundofamerica.com. Self-storagefundofamerica.com is the portal. And this is what it looks like. And then you'll access, you'll click is like, yes, I want to access the PPM, and you'll fill out your information. And let's see, and I'm going to go through this because I had a couple people that were like, trying to figure it out. And then what's going to happen is you're going to fill all this information out to create your account. And then it's going to trigger, like, basically an email to me that says this person is interested in accessing the PPM. And then I will give approval to you. All right. And then inside, once you get access to the PPM, inside it'll look similar to what this is, but it may look a little bit different for you guys. but you'll have like read the PPM up here. So you can click on this and you can view the PPM, you can download it, you can request a hard copy, right? And then you'll have documents over here. And the documents is where you see the investor presentation is there. As we go forward, I'll add more documents, this is where we'll put like the report, the quarterly reports or the annual reports and these kinds of things. So you'll have a little like dashboard area where you can come in and you can see all the documents. You can see the SEC filing. You can see all this information right here. Okay. And so this is kind of what it looks for. And then, but what I wanted to say was like, as you go through the process, what it's going to say, well, as you start looking at the PPM, what's going to pop up is like, are you interested in investing? And then once you're interested in investing, what will happen is it'll pop up and say, it'll have like an accredited investor section on it here. And it'll say, yeah, here it is, investor, like an investor accreditation. And this is where you will have like a document, essentially a document that you need to sign that says you are accredited. And if you're not accredited right now, essentially what I wanted to say is if you're not accredited right now, what you have to do is you have to just get either like your accountant, or, somebody like this to approve you and say, yes, this person makes enough money to be accredited. Okay. And so that's kind of the process of how it works for you to show that you're accredited. All right. And I think accredited, if I'm not mistaken, I think it's like you have to make, what is it? If somebody knows what it is, it's like 250,000, or you have to have $1 million in assets. Rob, do you know this offhand?
That's right. What you just said is right.
Okay. You make $250,000 or a year, or you have $1 million in assets.
Right.
Yes. Okay, good. Okay. And I wanted to go back to the presentation. So I don't want people to be scared that it's it's an accredited investor thing. I can help you walk through this process, or if you need to. And also I was going to say too, if anybody needs to jump on like a Zoom meeting and ask me questions or anything like that, I'm here. Like, I'm not like this person that's like hiding or whatever. So I'm always open to, you talking it through and hashing it out, what your questions are and stuff like this. Okay. And, so this is the characteristics of what we call the waterfall, which is really the hurdles that I talked about, right? So the hurdle rate is up to 10% is tier 1, right? It's 96% investor, a 96% investor investment, and then 4% by we're the sponsor, we're the co-invest at 4%. We get no promote, that's no split. So if we do not make, more than a 10% preferred return, then we will not make any money on the deal. Okay. Once we get past 10%, right, then up to 15%, it's a 76% investor, 4% co-investor, co-invest, sponsor co-invest, and then the promote is ours, 20%. And then after 15%, thereafter, it's 71% to the investors, 4% to for us, because we already have the 4% in, so we get that as our investment basically. And then the 25% promote, all right, is what it goes to. So let me know if you have any questions on that. And finally, the management part of it is that obviously I said we do have a management company that's set up. It's going to be managing it. There's a one-time fee, right? I mean, sorry, it's not a one-time fee. It's a one-time yearly fee is what it is, which is 0.625% of the gross purchase price. All right. And that's our management fee. Our acquisitions fee is 0.50% of the purchase price. That's like a one-time fee. That's the one-time fee where it's like this one fee we're going to get just for acquiring the property. And then on a yearly basis, we get 0.625% of the gross purchase price. And then if we happen to add on and value add the property and build more units, if we happen to do that, now typically we don't, but we do have a couple of them that we are going to be doing this on. Then if we find such a great deal, maybe we'll do that, but It's a 5% development fee on the new construction or expansion, and then plus us to manage that, and then a 7.5% general contractor fee. All right, for us to manage the construction. Okay. And let me see, I think, yeah. So like I said, we went through our business strategy. So you can go through the rest of the presentation. It's really a lot that I just kind of like went over, but just without the slides. And it really just kind of goes over like, you know, where we're from and what we're focusing on and this kinds of things. So that is basically, oh, sorry, I wanted to go over real fast. I forgot about this. The like an example of a deal that we have. So let me see if I can make that. This is kind of hard to see. Let me see. Let me slideshow this. Can you guys see this if I slideshow it? Is it bigger now? Or do I need to stop share and reshare? I'm going to just stop share and reshare real fast because I want to make sure y'all can see this. Okay. All right. So there, that should be good. Okay. So hopefully y'all can see the screen. And this is basically this is one of the facilities that we were looking at buying. And this would be like something that would fit into the portfolio. Now it's a little bit less. It came into $650,000. Right, so the purchase price was a little less than what I said, but it was such a great deal, be perfect for the fund. And essentially this guy, it was in Monticello, Florida, right in the Panhandle, right? And we already have facilities in this area, so it would be a great fit for us, especially for the boots on the ground people, because then they could go and just like easily manage it. And but the owner inherited it from his father. His father passed away, and then he didn't really want it. He just doesn't want it, right? So what happened was it was 168 units. It was about 25,000 square feet, and it was on 10 acres. There was 11 buildings, and it came out to about $35 a square foot. Okay, and so in order to purchase this thing, right, it was going to cost us around $25,000 plus professional fees, and then maybe a little bit of clean out, you know, adding some technology, painting, doing the thing, or, you know, CapEx, doing the things that we needed to get it up and running, you know, making it look nice. It was like it's a white facility that was like kind of like older. It really needed to be power washed, maybe even repainted, this kind of stuff, right, to make it look nice. And this facility looks like, let me see if I can find some pictures of it. Hang on, I'm going to undo this, and oops, yeah. And it looks like, I think, hang on, go forward. Yeah, okay. It looks like just like these. I mean, essentially it looked exactly like this. These, just picture it to be white instead of these colors. And so basically we were going to acquire this thing for $650,000, and immediately as soon as we bought it, we would we would value add it and increase the rental prices. On top of that, we would clean it up, make it look nice, make the building look more presentable, and also on top of that, we were going to add some units, right? Because it had the 10 acres on the back. So essentially the storage facility was on the front of, on like a big kind of like big highway. And on the back, we could add some more units. And he was about 50, I think it was like 50% full, 50 or I can't remember. It was like 50 or 60% full. So he wasn't really managing it properly. He really didn't want to, but I just wanted to show y'all that type of a facility would be exactly the type of facility that we would be purchasing, right? And focusing on. And we would be able to, I mean, 168 units is typically worth minimum 1.5 million, if not up to $2 million. All right, depending on the market and how long we hold on to the property. But like I said, we would definitely be able to, in this case, double to 1.5x the facility, plus add on units to add even more value add and to make it even a better deal, right? So that would be kind of a typical storage facility that we would buy, and then I went over last time I went over another facility that we were looking at buying. And, every week I'll come up with a different type of facility so that we can go over those and let you know what we're looking for. And like I said, I'm looking for commitments of $25,000 or more. And I'm looking for 40 of those so that we can go out and buy a facility just like the one that I just showed you. Okay. And that is really it for the presentation, I think. Is there anything is there any questions or anything that anybody wanted to go over about the fund? You can unmute yourself and ask the question, or you can type it into the chat. Oh, I wanted to go over actually just a couple of things. There was a couple of questions I wanted to go over, so let me not share this, but I'm going to just pull it up real fast. Hang on. I got an email from somebody that asked a couple of questions, so I just wanted to make sure that we went over theirs. Okay. So she basically was asking, like, when you describe the waterfall for the remaining cash flow, are you talking about the distribution of additional cash flow beyond the preferred returns when you hold the property, or the equity split on the back end, right? And so we went over this with, will the equity split be done at the time that you choose to sell the property, or at the end of the 5 years? All right, so that was her question, which I thought was a very good question. Get out of this and go back to Zoom. And so basically I want to make sure that was clear, is that the hold time is 5 years, but what's going to happen is, like, every single property that we have, it depends on what type of property it is. So it's really a deal by basis on what we do with that property. So we could hold onto the property for a year or 18 months and then sell it out. So our exit strategies within the fund are typically to sell them out, to sell them and to just, like, get rid of them. And then when we sell that property, all of the investors will get that dividend. Okay. And then on top of that, or we could refi those out. We could refi them once we get it up and running, and we have, like, a P&L and a balance sheet, and maybe it's, something that we can show that we've made this much money, and we could take it to a bank, and then we could refi those out and we can hold those properties. So those are really the two types of exit strategies. And then one value, and then the value add would be raising the rents. And on top of that, if we wanted to add more units, if there's a possibility to do that, but if not, then we'll just be able to value add the property by raising the rents and managing the property properly. Okay. But so what she was asking was about the exit strategies, and, like, when is she going to get paid? And essentially you're going to get paid when we make money from your distribution, right, on the dividend. And then on top of that, on the back end, when we sell the property, and when we actually sell the property, so, or refi out. So, and I don't know when those are going to be. It's going to be typically probably, within a year to 2 years, I would say, on most properties. But it's like I said, it's a deal by deal basis. So I can't really tell you when exactly you'll have the, your return back or whatever. Okay, I want to make sure I went over that. Is there any other questions? Anything else that anybody can think of that I did not go over? Or Rob, did you have anything you want to say? Or Kevin, you said you unmuted yourself. You want to ask a question?
Yes, the fund is 7 million, over 7 million, and each facility is about 1 million.
Mm-hmm.
So you will continue by 6 or 7 or something like, and
yes, exactly. Yeah. So my idea was to buy 6 or 7 facilities within the fund.
Okay.
Yes.
So each facility will be under that fund's name, or is that the individual name?
It'll be, actually, each facility is going to go under its own company. You're right. So we'll have them all separately, but the fund will be managing everything. Actually, Rob, how did we decide to do that? Do you remember? I know.
Yeah, so the fund actually owns all of the individual properties.
Yes.
But each property will be set up with its own LLC for a number of reasons, notwithstanding like general liability insurance and things of that nature that we can get on a property by property basis. So the fund owns everything. So even on the LLC for a property, it'll be a sole member owner, and the sole member owner will be the fund.
Does that make sense, Kevin?
Yes.
Okay.
And if one of the property gets sold, it has some profit. So you distribute that profit to each investor, or is that distribute back to mix with those funds again?
So as we discussed this on Saturday, when we were talking about, Rob and I were talking about it, we're going to be distributing your distribution, sorry, the money that you make back to you. All right. The money that you make, but the initial investment will keep in the fund. Right, Rob?
Yes.
Yes. Yeah. So the money that you put into the fund is kept into the fund for 5 years. Okay. But all the money that you make on each deal, you will have a distribution for that.
Okay. Thank you.
Okay. Okay, good. Okay, what else? Other questions? Anybody can think of anything? Okay. Okay, good. Well, I appreciate you guys hanging out, and we will send a replay of this. So if you guys need to rewatch or anything like this, let me know. And then also go to the portal and then just ask for access, and you'll get access. You can start really looking at everything. And then if you have any questions at all, don't hesitate to email us. My email is questions@stacyrosetti.com. questions@stacyrosetti.com. And then we can, if you need to have questions of a Zoom meeting or anything like that, just let me know. I'm here to help anybody. Okay. All right. I appreciate your time. Thank you so much. And we will talk soon. Okay. Thank you. All right. Thank you, everybody. Take care.